Do you actually know that your bank wants you to be financially stupid, to make mistakes when it comes to financial decisions, and to also enrich the banks because of your high level of ignorance? There's actually a secret that your bank does not want you to know, and because you don't know this secret, you will actually remain in what I call perpetual ignorance. The more stupid we are, the more ignoramus we are, the more gullible we are, the more the banks are making more money. This is not to say that the banks are actually evil, but this is to say that we are actually in a capitalist system. And under a capitalist system, if you don't have financial education, you'll be so surprised that you will be left, unattended to, or you might not be able to fulfill your financial obligations or attain what I call financial independence or financial freedom, because the banks actually want all of us to be financially stupid, or they want us to be stupid. So let's say this scenario, or let's look at it this way. If you actually have a certain amount of money in the bank and you're actually thinking that you are rich, that you can actually retire, that you can actually decide not to work again, you'll be so surprised that that money is meaningless, or that money does not carry weight, or that money does not have much value, because at the end of the day, that money is actually kept in the bank and it's not creating value. But unfortunately, as you actually keep that money in the bank, immediately the money is actually given to other people that actually needs that money. So if you have a certain amount of money in the bank will actually be very happy, will be very glad to lend you some money, where you actually pay 34 to 38% as interest rate to the bank. And once you are paying this money, you are making the bank rich. You are making somebody or some group of people in the bank to go on vacation. You are making them to have a robust account. You are making them to be very wealthy. You are creating more money for them. But on the other hand, you are creating a hole in your pocket, because right now in Nigeria, the amount of money that's actually paid as interest for loans and mortgages is about 34 to 38%. That's a big amount of money. So the banks does not want you to have an idea of how the system actually operates, and that's why in this video I'll be talking about all these things, those things your bank does not want you to know, how the system actually operates. As a result of this level of gullibility and ignoramusness, the banks are making tremendous amounts of money quarterly, yearly, every year out. They are making a lot of money. Some of them are making about, a stupendous, very gargantuan, very large chunk of money as profit at every financial year. And you need to go and check your records to know how much most of these banks are making. Talk about UBA, Zenith Bank, and the rest of them. I'm not here to condemn the bank, because it's actually good to save your money in the bank. But when it comes to investment, it is not good to keep that money in the bank where your money is late followed and your money is not working for you. And that's why we talk about investment here. So there are some certain things that your banks does not want you to know. So many times, for example, we seek for financial advice from our banks. Probably want to go into one business or the other, and you believe that the banks will actually, put you through on how to actually go about that business. I'm sorry for you. Your bank is not your financial advisor. Your bank is there to make money. Your bank is there to make profits. Your bank is there to profiteer as a result of your level of ignorance. If you are actually seeking for financial advice from the bank, then I'm sorry, we are actually in the wrong place. Now, when you actually look at it in this scenario, when you actually deposit some amount of money in the bank, do you think the money is going to stay in the bank and the bank is not going to use the money? Of course, the money is not going to stay in the bank. Immediately you deposit the money in the bank, the money is given out to somebody else, and the bank is going to make more money as a result of that. So the money is given out as a loan to somebody, and that person or individual that money actually goes to from the bank will be paying the bank some amount of money in form of what? Of interest rates. Now in Nigeria, the interest rate is very, very high due to high level of inflation in this part of our world. So if you keep your money in the bank, or you actually feel or thought or believe that keeping your money in the bank will actually make you to be rich, you are wasting your time, because at the end of the day, the bank is not going to give you any form of interest for the money you've saved in your bank account, but rather immediately your money is actually given to someone out there in form of a loan to make use of the money in making profit for himself and also generating profit for the bank as well. Here are the things that your banks does not want you to know. Number one, spending money stupidly is good for the bank. You see, when we spend money stupidly, when we spend money on things that cannot actually create value, when we spend money on liabilities, when we spend money on expensive vacation, buying expensive cars, spending money on buying, living in an expensive apartment or an expensive environment is actually good for the bank, because at the end of the day, most of us actually go to the bank to borrow this money from them. So when we spend money, extravagantly, flagrantly, when we spend money exorbitantly, when we spend money, stupidly, or when we spend money on drugs or liabilities or things that cannot create value for us, the banks are actually happy. So spending money stupidly is good for the bank, because you might actually need the bank at the end of the day. So banks love people spending, stupidly on things that cannot create value for them, or things that cannot create money for them, or something that cannot actually generate a profit for them, because at the end of the day, you will get the money from banks. So banks loves it when you spend money that you don't actually have. In most cases, for us to actually finance this vacation, buying these expensive cars, living in an expensive apartment, and some other things like that, most of us actually go to banks. For example, you want to buy a phone of 1.5 million or 2.5 million. Of course, I've seen some people that actually use 2.5 million or 1.5 million to actually buy a phone, you understand? And in most cases, most of them go to the banks to actually ask for a loan to buy these expensive phones. So at the end of the day, the question is, most of these phones that people are actually buying, or most of these expensive cars that people are actually buying, do they actually need it? Is it very important in their life? Is it something that can create value in their life? But in most cases, it's called that most times, most of these things are actually liabilities that cannot generate value. So when people actually go to the bank to ask for money they do not have, the banks are actually very, very happy. In most cases, or in this scenario, the bank look at them as as a profiteer. A profiteer in the sense that the banks are actually generating profit from them, making more money from them through the interest rates and some other things like that. So banks loves it when you spend the money you don't have. So people spend a lot of money on credit cards, on buy now, pay later, on loans, thereby incurring tsunami of debt. They incur tsunami of debt. They incur a large shock of debt that for 2 years, 3 years, if care is not taken, most people are paying this loan. And the funniest thing is that immediately they finish paying the loan, they apply for another loan. You can see. So you can imagine how much you are actually generating for banks every year through the loans you actually collect. Don't get me wrong. I'm not saying you should not collect money from the bank, but it is supposed to be the money that you are going to use to do a business, or the money that will generate interest for you at the end of the day. So if at all the bank is going to bring their money, you still have something to leverage on at the end of the day. But it is not a good idea when you actually go to the bank to borrow money to finance liabilities or things that cannot actually create a value. So most people are actually happy when they have this credit card. They love it when they go for buy now, pay later. They love it when they go for easy buy and the rest of them. And they also love it when they go for loans. And at the end of the day, they are incurring a lot of debt. And they are also making some group of people, the banks, to be very, very rich, or very, very, to have a lot of money at the end of the day, because they are making a lot of profit from them. So by doing this, a lot of people are making the banks to be very, very rich. The banks are getting richer, and some people are getting poorer at the end of the day. Because at the end of the day, if you calculate the amount of money you're actually using to pay for interest, that money will have gone a very far way if you actually invest that money into portfolio investment and some other things that can generate money for you at the end of the day. You need to stop doing this at the end of the day, in order for you to be able to make yourself rich, in order for you to be able to invest your money, rather than going for credit cards, easy buy now, pay later, loans and the rest of them. If you don't have anything important to do with that money that can generate another form of money for you, you don't need to go for that loan. Now, this is the secret. If you actually wanted something that is on the high side, why don't you take your time to use your money to buy it, or take your time to save some money to buy it? Some people will say it is not always easy to save money, because a lot of things will always come up. Of course, it's always easy to save money. You can save money for emergency, you can save money for circumstances. You can also save money for those things that you actually wanted for yourself. by waiting for the right time, saving the right money. Maybe you can save the money for 6 months, 7 months or 4 months or thereabout. You can raise that money and buy whatever you want to buy instead of going to the banks to actually, go for easy buy now, pay later, or loans or credit cards and the rest of them, thereby incurring a lot of debt for yourself. Number two things that the banks does not want you to know is that the banks does not want you to know how the system actually operates. The banks does not want you to know how the system actually operates. Now, this is very important. How does the system operate? Don't forget that we are actually in a capitalist system where profit is a guiding principle of any entrepreneur or business owner. The same applies to the bank. So banks also are looking for what we call profit. Now, the banking system follows what I call fractional, reserve lending. Fractional reserve lending. Now, what do you understand by fractional reserve lending? It's like a circle. Do you get it now? Immediately you save your money in the bank, the money is given out to somebody now in form of a loan. Do you get it now? When the person gets the money in form of a loan, he also deposits the money in another bank and use some part of the money. Once the money also gets to bank B, the bank will also lend the money to another person, and the circle continues like that. And at the end of the day, bank A, bank B, bank C, and all these banks are making a lot of money. So if you're talking about fractional, reserve banking, the bank does not keep the money as a liability. So when you keep the money in the bank does not keep the money as a liability, but rather will give the money out to people in order to attract what we call a profit. So when you keep the money in the bank and you feel, my money is actually in the bank, resting in the bank, your money is not there in the bank, resting in the bank. The money is immediately transferred in form of a loan to somebody that needs the loan. Do you get it now? Now the bank is making money, but your money is not working for you. Your money is only there stagnant and not creating any value for you at the end of the day. Now the banks are creating value when they make profit. The banks are creating value when they give out loans. But on your own side, you are not creating any value for yourself because your money is not increasing in interest rates. In most cases, the banks will even charge you some charges for keeping the money with them. The banks are making money and you are not making money. So when you keep your money in the bank, the money is actually given to other people to facilitate more profit for the banks, and the banks is actually making a lot of money at the end of the day. So stop keeping your money in the bank. But if you have to keep your money in the bank, the money should be for emergency. Why those money that you do not necessarily need at that immediate point in time can be used for investment and generate money for you, can be used for passive incomes that can generate money for you, that can be used for creating what I call a portfolio investment that can actually generate money from you. Now, you can imagine if you actually invest your money and you are actually getting like 28 to 20% returns, per annum as a profit on your investment. Do you know how much that one is going to be? For example, if you're able to raise like 1 million naira and you put into a portfolio investment like mutual funds, or money market funds. Do you get it now? Money market funds. And at the end of the day, that 1 million naira is going to generate you 230,000 naira. 230,000 naira. So at the end of the day, you have 1,230,000 naira in your investment portfolio. That's how much you're going to make in a year by keeping your money or putting your money into an investment portfolio like money market fund. So you are going to make more money. Do you get it? You are going to make more money. But if you put your money in the bank, it's going to be 0.000 interest rates at the end of the day. You are not going to get anything. But if you put your money in investment portfolio like money market fund, you are going to get 200 to 230,000 naira as an investment profit every year. Do you get it now? That is good, isn't it? So why keeping your money in the bank and not investing this money? You are making the banks richer, but you are not making yourself richer. You need to take a wise turn today, because of the fact that most of us are actually, ignoramus of how the system actually operates. So the banking system does not want you to understand or know how the system actually operates when we talk about the fractional reserve lending. Anytime you actually, the banks actually give out a loan, they earn interest on your money. So anytime you deposit the money in the bank and the bank actually give the money to other people that actually request for loan, the banks are actually making interest on your money. They are making interest on your money. Look at that word. They are actually making interest on your money, but you are not actually making any interest, and you are actually happy that you have 5 million naira in your bank account. You'll be so surprised that by the time you dip your hand into that money is going to disappear. Do you get it now? Because the money does not add value. So because the reason is that in a period of inflation, inflation always surpasses expenses. Inflation always surpasses expenses. What are we saying? What we're saying here is that when you have money, you will spend more, but you are earning less at the end of the day. But when you invest, do you get it now? Your investment will surpass inflation, because why? You are actually earning money at the end of the day, but your money is not stagnant. So so banks sit on what I call a fraction of your money deposited in the bank, and they give out the rest of the money in form of a loan. They sit on a fraction of the money you actually invest in the bank. You actually put in the bank. But the remaining part of the money is actually given out in form of a loan. And that's why some people say, okay, they sit on a fraction of money in the bank, but I go to the bank and actually get my money. Of course, they will give you the money. But when it's a certain amount of money, the bank might not be able to honor it, because why? If they do, the banking system is going to collapse. And that's why if you look at it in Nigeria now, some banks will tell you that if you want to withdraw money from the bank, from the counter, you can withdraw like 50,000, 20,000. They have a limit. Do you get it now? Even in the bank system, in the digitized banking sector, they also have a limit on how much you can actually withdraw at the end of the day. The reason is that if they actually allow everybody to actually withdraw that money at the same time, the banking system is going to collapse. There's a secret that you need to learn today. You need to know today. So it should be noted that you cannot withdraw this money, because if they do, the system will actually collapse. When you put the money there, they give the money, and some fraction of the money is kept in the bank for those that actually want to withdraw that money one way or the other. Now, number 3 things that your bank does not want you to know is that your bank does not want you to know they are not your financial advisor. The bank, which is the third one, does not want you to know that they are not your financial advisor. What do I mean by financial advisor? A lot of us see the bank as a financial advisor, or I can go to my bank, my bank official or my bank officer or my account officer will advise me on the kind of business they can do, that can make me more money and generate more money and become rich and the rest of them. I'm sorry, the bank does not do that. So your bank does not know that, does not want you to know that they are not your financial advisor. You need to get this, and you need to understand this, because a lot of people go to the bank to seek for financial advice, but the banks are not your fiduciary. They are not your fiduciary. They are not your advisor. They are there to make money. They are there to exploit your level of what? Of ignorance. They are there to exploit your level of what? Of gullibility. They are there to exploit our level of what? Of not knowing anything due to our lack of a financial education. So if you are going there looking for the banks to actually advise you, you're actually wasting your time. They are there to make profit. They cannot advise you on what to actually do. What you can actually do is that you need to get financial education. You equip yourself with financial education so that you can be able to know where you can actually invest your money and make more money at the end of the day. Like I always say, some people are making $10 in a day in Nigeria. Imagine if you're making $10 in Nigeria now, you're making 16,000 naira in a day. Multiply 16,000 naira in a day times 30 days. You'll be so surprised. That's about 320, 480,000 naira. Some people are making every month as a profit on their investment portfolio. Why don't you seize this opportunity? The banks are not actually there to protect your money, but to make commission or profit for the banks. So if you think that the banks are actually there to protect your money, it's a big lie. They are not there to protect your money. They are there to make money. They are there to make profits. They are there to make commissions. They are there to make to create wealth for themselves. They are there to make more money for themselves based on our level of ignorance. So when you put your money there, they give out the money and they make money in form of interest and other things. And that's why every financial year, maybe quarterly or yearly or whatever, you discover that when they declare their profit, most of us will be wondering, how do they make this profit? They are making this profit based on our level of ignorance, because most of us are rushing to the bank every time to collect loans from the bank, and when we collect this loan, they are charging us interest. So the banks are in the arena or in the spheres of making profit, not creating financial advice. So banks are in the business of making profit, not creating financial advice. So if you are looking for financial advice on how to actually invest your money, go and watch more of my videos where I actually did an in-depth analysis of the businesses or investment portfolio you can actually invest your money on and make more money at the end of the day. Then number 4 things that your banks does not want you to know is that they do not want you to know that they do not follow their own advice. A lot of banks will advise you to keep money in the bank. It's advisable to keep money if you want to be wealthy, if you want to be rich, if you want to be if you want to be flamboyant, if you want to live an easy life, if you want to become very successful in life. there is very imperative or obligatory or mandatory or a mandamus that you have to keep your money in bank. That is what the bank will tell you. They will encourage you to come and keep your money there. They will tell you, come and keep your money there. We are there to ensure you, they are there to protect you, we are there to protect your money and the rest of them. And most of us, we carry this large chunk of money that we don't need at that immediate time to go to the bank. And the bank will gladly collect your money and lend out your money in a fractional reserve lending to those that will borrow the money, and the banks are actually making a hell of a profit. They are actually making a lot of a profit because of our level of ignorance. So they will advise to save the money there, and they will advise that if you want to build wealth, that you have to save the money in bank. You have to know categorically, emphatically, that saving money in the bank cannot create a wealth. If you want more on that, watch most of my videos where I explain how it does not create a wealth. So if banks actually follow their own directives or they follow their own advice, they will go bankrupt, because at the end of the day, nobody is going to keep money with them. So this is as a result of the increase in what? In the inflation, where income that cannot meet what we call expenses. So if bank actually have to follow their advice, they will become bankrupt. Because why? Nigeria and other parts of the world now are experiencing what I call inflation. So if you have like 10,000 naira in your hand now, you'll be so surprised that that money cannot buy you anything. That is the effect of inflation. Inflation is rampant all over the world now. In Nigeria, inflationary trend is about 27 to 34% now, and things are very, very expensive in the market. People are going, people are mourning, people are crying every day that things are very expensive, and people are going out on the social media to vent their anger on the government that things are very, very expensive. But on the other hand too, some people are very, very happy because they are making more money. Do you know that in a period of inflation, if you are into investment portfolio platforms, or you are actually investing your money, you make more money. In a period of inflation, interest rate goes up. Do you get it now? Interest rate goes up. The more the interest rate actually goes up, the more some people are making more money. So in the period of inflation, if you are actually into investment portfolios, if you are actually investing your money, for example, I remember some time ago, some years back, about 2 years or 1 year back, when I started my investment, it was about 11%, but now it's about 23%. You see it now, because of inflation. So the more the inflation actually goes up, the more some people are making more money. You need to get that into your head. You need to understand that. So if you want to know more about this, go and watch most of my videos. And more inflationary trends are still coming, so you have to be prepared for that. And the best way in which you can be prepared for that is when you actually invest your money. So inflation will not affect your money. Inflation will not affect your money because your money is actually creating more value for you in this period. 5 things that a bank does not want you to know is that they do not want you to understand that you need to own the bank. That is another thing that they don't want you to know. Your bank does not want you to know you can own the bank. They don't want you to know this secret, and this secret is very, very important. You see, most of us will say, can I actually own the bank? Yes, you can actually own a bank. You can actually own a bank. How do you actually own a bank? By buying shares into the bank. Very, very simple. Most of us, we actually going to the bank to save money and the rest of them, but we don't understand that we can be a co-owner of that bank. You can become a co-owner of that bank when you actually buy shares into that bank. You get it now? So banks are making a lot of profit through loans and other mediums. They are making money. They are making gargantuan amount of money at the end of the day because of our level of ignorance. Because the money you actually keep in the bank is actually given in form of a loan to other people, credit cards and other facilities like that. But you can actually own a bank too. I'm not saying you should create a bank. What I'm saying there is that you can be a co-owner of the bank when you buy into the bank. Do you get it now? So when you become a co-owner of the bank, you share the profit of the bank, because at the end of the day, the banks are going to declare what I call dividends at the end of every financial year. And once you have a certain amount of shares in that bank, that means that when they are sharing that dividend or profit, they will also give you your own share. Can you see it now? So you can actually be a co-owner of the bank, but your bank does not want you to know that you can actually be a co-owner of the bank. So while they are giving out that loan, you are also sharing part of the profit of that loan. So you can actually invest in a bank and become a co-owner of that bank. That's what we're saying. But your bank does not want you to know that. So as a result of you are entitled to your own profit of the bank. When you actually invest in the bank, you are actually entitled to some profit made by the bank. So you can make profit what I call dividend. You can actually make profit what I call a dividend. When you actually buy shares into the bank, you can make dividend, or you can actually make money through what I call a appreciation, when the value of the stocks actually go up. So saving money in the bank does not create a value, especially in a period of what, of inflation. So if you are saving money in the bank in a period of inflation, I'm sorry, your money cannot have value because your money is not actually working for you. But when you actually invest your money into that bank and you become a co-owner of that bank, that means that you're going to share part of the profit of that bank at the end of the day. You get more money, you make more profit, you make more returns when you are a co-owner of the bank than when you're actually saving the money in the bank. So think about it. Don't save money in the bank, but rather buy into the bank. Buy the shares of the bank. You understand? At the end of the day, by the time they share the profit at the end of every financial year, you are going to make your own profit. They are going to share some part of that profit to you as well when you buy into the bank by becoming a co-owner of the bank. So banks are not actually evil, that we don't need to deal with them, or they are necessary evils that we cannot do without. What we're actually saying is that it is good to actually put money in the bank, but the money we can actually put in the bank is the money that we can actually use for emergency. The money that we can actually use when event or situation happens. We can easily go to the bank and take that money. Or the money we can actually put in the bank and the money that we actually spend on daily basis for miscellaneous on daily basis. You transport yourself, you feed, and some other forms of money like that. You can actually keep those money in the bank. They are good to keep in the bank. But those money that you don't need at that immediate time, that most of us are saying that we are keeping for retirement, those money are not supposed to be kept in the bank. Those money are supposed to be put into investment. Now, when I'm talking about investment, I'm not talking about NMM. I'm not talking about CBEX. I'm not talking about all these get rich quick scheme that people are going into and they are duping them. And some people have actually committed suicide. Some people have actually gone into mental, disability and rest of them. I'm not talking about all those ones because those ones are actually, trickish and very, very scandalous, and they are Ponzi schemes. Because if you actually put your money there, you are going to regret at the end of the day. That's not what the kind of investment we're talking about. We are talking about investment where you can buy stocks, you can buy shares, you can, invest into rental estate or real estate. You can invest into cryptocurrencies and rest of. Those are the kind of business we are talking about, investment we are talking about here. Not all those Ponzi schemes that people are doing and they are gnashing their teeth at the end of the day. So you can actually invest your money and make money at the end of the day when you invest there wisely. There are so many investment platforms there they can actually invest your money. We have something like FCMB Quest. We have Stanbic IBTC investment portfolio. We also have a Quantum Zenith investment portfolio. You can actually invest your money in all these things, and there you can actually invest your money into mutual fund, into ALA, into money market funds, into dollar funds, into fixed income funds. There are many of them, and at the end of the day, each of them attract some percentage of profit at the end of every financial year. So the more you save more money to them, the more you invest more money to them, the more you make more money at the end of the day. So the system is designed to actually make us to be stupid, to make us look stupid, to make us to be gullible, to make us to be not to understand how the system actually works, because that's capitalism for you. Capitalism does not want you to know all these things. They want you to live in perpetual darkness by putting your money in the bank, and they are giving your money out there, making more money for themselves, but you are not making money for yourself. So the system is designed to make a lot of people stupid through bad decision making. Through bad decision making that we make, and at the end of the day, most of us are actually regretting it, one way or the other. So if you want to become rich, if you want to become wealthy, if you want to become, very, to live a comfortable life, to have financial independence, financial freedom, and the rest of them, I think you need to watch this video and watch all of my other videos that are out there on how you can actually invest and make money. Some of us are making money. When you are making money, you are actually happy. When you are making money and you have a primary job you are doing somewhere, and money is also entering somewhere there too, you are going to be happy because you're actually investing your money wisely and your money is working for you. So at the end of the day, you can actually go through the decade of sacrifice. I can bet you will live the life you wanted at the end of the day. A life that is devoid of financial risk, a life that has what we call financial freedom and independence. Where your money in the future can actually get you whatever you wanted, even when you are not working again, even when life happens, even when you've lost your job. you can do without working again, because you have already invested enough money that can carry you through your lifetime. And that's what we're saying. So take this advice and help to share this video to people that actually made this video, because a lot of people are actually living in ignorance in this part of our world. They don't understand how the system actually works. So till I see you next time. If I've actually gained something, click on that subscription button now and share this video. So I see you next time. Thank you and God bless you. Bye bye.